Hey guys, happy Monday. Welcome back to episode 2 of The Mid. The Mid is the Mortgage Intelligently Deal Desk, where we discuss recent loans that we have funded on our exclusive portfolio product lineup. And today we're going to talk to Ray about a scenario that he had that was extremely complicated. It was one borrower looking to acquire and refinance multiple properties in his portfolio of homes. So Ray, without further ado, tell us a little about the properties, the transaction. Let's start with the states they were involved in.
Yeah, sure. So it was a primary residence. It was a cash out on a primary residence in Maryland. And the client was looking to purchase an investment property in Florida. So those were
Okay.
the two states involved.
All right. And then what was something special about the homes? Was it a specific type of property, or what was the problem that you guys were trying to get over that made this loan difficult?
Sure. So it was not a unique property. The issue was with the transactions as a whole, we're really just showing income in order to qualify for both transactions, even the cash out refinance. The particular client is actually an owner of a real estate brokerage company in Maryland. And, although they have, lots of revenue into the business account, once self-employed, just didn't show sufficient income on their 1040s on their personal tax returns in order to qualify either for the cash out refinance on the primary residence nor for the purchase of the investment property.
Okay, so you did two transactions in this one. You
Correct.
took money out of his primary to help him purchase an investment in Florida.
Correct. He wanted to pull out some equity from the primary residence, which he had lots of equity in order to use those funds for the down payment for the purchase of the investment property down in Florida. That's right.
I got you. Okay. Usually we talk about, hey, did you save any commission? Because we're always rescuing our partners' commissions. But here it seemed like we're doing more than rescuing commission. We are, what were we doing? What did we help rescue or solve here?
Yeah. So, well, we definitely rescue commission, but definitely from the listing agent, right, for the property
Right.
purchased down in Florida. Being that he was a realtor, didn't really necessarily rescue his commission. But what we did rescue was the fact that he was about to use a hard money loan, right, with a
Wow.
like a 6 months, 12-month balloon to purchase the property down in Florida. And his intention is not to flip the property. His intention is to hold on to the property, right? So within the next 12 months, he would have needed to do something, another hard money loan or something else of that nature, just to find some sort of financing for the property. So what we were able to do with our MCF exclusive portfolio program is put him into a 30-year fixed rate mortgage where, he saved obviously a ton of money and not just upfront fees, but obviously long-term, not having to refinance. And clearly, obviously, we all know what the hard money interest rates look like. His rate is, less than half of that. So
Absolutely. So we did save him from a hard money deal and volatility that comes with that. Now, you mentioned that his goal is not flipping, but it's also to hold. So do we, I know the answer, but for our audience, how can an investor use these loans that we offer, to build a real estate portfolio?
Yeah, sure, Amir. So for this particular client, he actually does have a portfolio of properties, which he about, I think it was I think he had about 15 properties and about, 8 or 9 of them were in or are in currently in hard money loans. So one of the benefits is we're also in the process of flipping those out of those hard money loans into our exclusive MCF portfolio program. Now, because he doesn't show any income on his tax returns, right? The primary residence, we did it one way to qualify him. And for the investment properties, we're doing it a different way, right? So on the primary residences, we were able to basically look at his business account, right, for his brokerage. And we saw, he has a ton of revenue that comes in, on a monthly basis. So we're able to qualify him based on that revenue that he has coming in from his business. account. And then on the investment properties, we're able to qualify him simply by the rental income that he's receiving on those properties. Now, the beauty of it is on the purchase, since it was not currently a rental, we were able to qualify him just based on the rental comps from the appraisal.
Gotcha.
So that was huge.
So the potential rental, you don't need to have a tenant in place when you're buying a property.
Correct.
Okay,
That's
perfect.
exactly right.
So that we discussed that. Now, just some high pointers to everyone that's listening to this to take away from what Ray just mentioned. There is no limit for us on how many properties you own. I get this, and I'm sure you do as well, Ray, too. That, hey, I have 20 finance homes. Can you give me a loan? My bank told me no. What do you answer them usually when that happens?
Yeah, I mean, just like your answer, Amir. Yeah, absolutely. Of course we can. Yeah, there's no limit on the number of properties you can own. None of these transactions are going through Fannie Mae or Freddie Mac or any of the housing agencies, right? So, yeah, no limit on number of properties. We welcome investors, whether they're looking to flip or holding on, we welcome all those transactions.
All right. Well, great job, Ray. Successful 2 deals. And we kept adding to this gentleman's portfolio. A saved listing agent's commission and also saved this borrower from a hard money loan. Guys, if you guys have investment properties and you want to grow a portfolio, not just fix and flip, we could help you with that as well. But if you're looking to grow an investment property and rinse and repeat and keep doing it again, we do not have a limit on the number of properties. We do have down payment requirements on investment properties, Ray. What are those?
So, the down payments definitely are based off of credit score criteria, right? Okay. So, but the down payments are anywhere from 20% up to 30%, depending on borrower's credit scores.
Right. Guys, 20 to 30%, obviously credit score, it has to jive with your credit score. But it's an opportunity for you to become a landlord, to become a real estate investor, and use future potential rents. You don't have to have a tenant in hand. Episode number 2 of the Mid, guys. I hope this is what you like seeing. If you like it, please subscribe to see how we're helping other individuals in our community and our realtor partners save their commission and avoid predatory hard money loans. All right, guys. Thank you so much. Thank you, Ray.
Yeah. Thanks, Amir. Thanks, everybody, for tuning in.